following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you're having a good morning. What else is there to talk about? Let's just take a look at Apple first. Long term, you guys know the story there. We've been talking about that. There's the weekly showing in the den right now. And, obviously had some impacting news come out yesterday. So let's take a look at this. We were getting up. You can't forecast this, folks. I mean, there's, don't be upset if you're not in the shorts before this had happened. And if you've been long for a while and you looked at this as an investment, these are just parts of the game of being a long-term investor, I guess. But now, taking into consideration that I'm not a huge fan of being in these particular instruments before these types of announcements, this is where we're at downstairs right now, 115.10 approximately, trading around that area. Here's the daily. And the big inflection point I think you need to pay attention to now, because they kind of let the air out of this based on, I think the statement was, let me just kind of, first decline in annual revenues in over a decade. But forecasts next quarter, great, blah, blah, blah. So here's kind of the line in the sand here on the dailies, 115.66. That's the big number there. And then you've got 114.82 down below weekly and for highs. So again, you're just coming down into this support, demilitarized zone, whatever you want to call it. And I'm just not a big fan of buying this stock. I know we've kind of been, on a relative strength basis, a lot stronger than the market lately. But again, I mean, this is a stock that, if it starts settling back into the balanced area below 1482, 115, that general neighborhood, get a weekly close below there. I still think you don't do anything with this. I still think the market in general has a bias towards the south side. We've talked about that. We've talked about how to trade that relative to the VIX. Remember, markets go, you got kind of two out of three things in your favor on this one. If you're trading the VIX obviously is going to go up, the market goes down. And if the volatility happens, the VIX is going to explode. And that usually means market going down too. But so, doing that VIX trade that Joey and Steve Banger and a couple, I've kind of distilled myself down into that mindset too. You're kind of increasing over 50% odds on that particular trade, considering earnings and a lot of other things involved. And when you look at Apple and take into consideration that biased opinion towards volatility in general, and then therefore the possibility of it going down, I think Apple is not, buy the dip on this one. I think you've got to wait and see, and I think you've got to wait and see for a long-term stake in the ground where the market decides that this stock should be on a weekly close. And if it's below that 115 area, I think you got a chance to kind of explore. And remember, we've got a relatively wide profile here. This is really interesting too. This algorithm puts this out and says, hey, we've got some volatility getting ready to happen. Even though we've been trading above profiles, it's okay to not be in all the trades all the time. And I've not been a big fan of being long this, but let's find out where we can pick a battle on the short side. All things considered, getting this weekly close below 115, 114.82 is going to allow me to think that, wow, we got a big wide profile. We could start exploring a lot of it. And then we've got a chance to play defense above that 115. And we just haven't had that opportunity in a while, as you can see on a long term. So, yes. So that's the deal on Apple. Technically speaking, we may have some fundamental things to talk about in the very near future. I'm just hoping and praying that my friend David White will call in about that. So I'm just watching it in here. Let's see. Strike. Okay. Pete, we're going to talk about a strike and it's a real simple plan on the VIX, but we will talk about that probably in the next segment or two. So I'm just going to keep running through the usual suspects here. So if anybody has any questions about Apple, or just a great question that somebody put out in the den about the VIX in general and what could be the strategy, throw them out there. Call in anytime, by the way. It's always a pleasure to talk to any of you folks out there. Crude oil, 49.52, 49.49. We talked about that yesterday. Talked about that was the near-term targets. Now we're starting to breach it, and we've actually kind of retraced back up into that area we talked about yesterday. But again, I think now, we've talked about trying to pick some battles on the short side with this product. Here's a long-term view on December crude. Here we are. We're getting below the top of the mountain there, that POC, and have the near-term targets been met? Yeah, and now we're just, we're going to be in a range here, folks, and if you want to trade crude, you're probably going to be looking at a bias towards the short side. Still stops above 49.5, and the short-term numbers. Here we go. I rarely pull these up, but we've got a 240 here now above short-term price action profile above, and that's actually bottom of the profiles at around 49.50 also. So may not be over on the short side right now, but again, we're going to chop around with crude, I feel, for a while. So if you like that herky-jerky action, you're probably going to get it. Ultimate targets on the short side right now, 46.23. I think we can easily get there. S&Ps. All right, Apple, big cap stock in the indices, without question. Here's where the S&Ps are residing right now, right in the middle of the profile. We talked about trying to lever again on the short side around this 2147, 2150, 2149, whatever you want to call it. Kind of got up in there twice past 2 days, and then the Apple news is along with some other stocks. We've got some things that got not crushed, but a little bit weighted towards the downside. And we were looking at also the scanner as we try to make some decisions on indices in general and where the tide of the marketplace is headed. This is our indices profile heat grew with our aggregate net profile calculations. We're going to talk about this a little bit more, folks, when we come back. Stay tuned.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show, and I think we're in for a real treat right now. I think David White's on with us. David, are you there?
I think maybe more of a trick than a
Hey,
treat.
man, I saw the dark clouds parting outside. I mean, I thought that this was a good thing that you were coming on.
You never know. I did
All
want to bring something up, though, since no one else has really talked about it. I've been watching Financial Infotainment Cable this morning, and I kept on waiting for them to do it because I was listening to the earnings call on Apple.
Okay.
But there's a couple of companies that have massive margins. One of them is Intel. It's had enjoyed, one of the only companies that enjoyed 65, 70% margins on it, products forever. But Apple is the other one. It's been able to make a device that anywhere from around, the last 5 years, $200 to $220, and sell it for anywhere from at one time $799, which was the average selling price of its iPhones. But if you've never been in retail, you're always looking at gross margins as you run things through. And I don't think in fact, I had to dig through all the paperwork last night to find it because I've always been waiting for the signal that Apple had a real long top out. Based on the average selling price, which is all they actually report for the product. But there's a couple of companies that tear apart the iPhones each time and tell you everything that's inside of it and give you a rough bill of materials. So you kind of roughly also know what the iPhones cost. Okay. Well, they kind of came off that $799 average selling price a couple of years ago. It's been kind of around $699. The 6 months ago, it was $670. This one, the average selling price was $619. So when everybody's looking at everything here, the last thing they're talking about is gross margins and the average selling price. They're actually talking about it included the lower priced iPhone, the plastic one. But the numbers that they have in those sales is small. It's less than like 5 or 7%. So you can go back and figure that 7% back out. And what you've seen is that margins have, at least from last quarter to this quarter, are down 3%. And everybody goes, okay, if I was selling 1 million phones, now I got to sell 1 million 0.03, right? I've got to sell 3% more to make the same amount. And the answer is not that. The answer is that now you have to sell almost 7% more to make the same amount of money.
Right. Exactly.
And everybody's, I don't know what it is, but maybe because it's tough to explain, or a lot of people probably never own their own business and had to look at gross margins as the defining factor of your business. But that's kind of, I think, what everybody's missing now is, even if they get the sales back that they had just a few months ago, they are not going to be making the same amount of money as long as the average selling price continues to drop.
That's everything you said. Is, if you, like you said, if you've run your own business or been involved with the numbers game like that, you know how terrifying it is for your margins to kind of start getting pinched, because you have to, you have to start doing some things differently internally if you think, if that's going to kind of stay the course. That's a great statement and paragraph you just put out there for us, David. What is the forecast for, and plus they're not really, I guess, factoring in also the forecast for margins. You know what I mean? Like, are they?
They don't do that at all. You have to back figure them. But I've been doing that for a while.
Right, but if that trend is in force, for lower margin, for that margin to kind of get pinched, that's, I would assume that's not very good.
No, and of course everybody and their dog is long on Wall Street, Apple, and has been forever. It's kind of the IBM. You're not going to get fired if you own it, even if it does poorly.
Right.
But it is the other thing that I really took out of the earnings call, besides the very snippy CEO when he was asked a question about what the future of Apple was, and he acted unkindly to the questioner, which I think at least a few people have kind of brought up already. He's acting a little snippy about what's coming. I know you can't tell us everything, basically was the question, but when does this new roadmap actually come out with some new product that changes the landscape of what we have? And he just got real snippy with the guy that asked it. And I think that was kind of, at least when the price started to break, that was kind of it last night. They didn't like the kind of we don't really care attitude, I think, that was kind of implied by that. But the other thing that no one is talking about, I think I heard it mentioned once, and that is they said that they were going to be up 10% in sales in China. They were down 30%.
Ooh.
And that was supposed to be where all the money in the world was going to come from. And I've noticed everybody's been dodging that this morning. One guy brought it up last night, and that was it. But I'm thinking, if there was any kind of giant road flare going off that we should be watching, it was that the whole promise was how many people were going to be buying Apple phones. And then I did look at some blogs and some other stuff. And the Chinese government is actively telling people that they are un-Chinese. If they are buying the iPhones, they can buy the Xiaomi, which is like a Z, or not a Z, it's an X IOME. I think it's the way it's spelled, but it's pronounced Xiaomi.
Yeah, it makes me think of Xiaomi.
They're basically telling people that they are un-Chinese, the Chinese government, if they buy an iPhone. So it's not like you got a real easy road to go on for that either. But I heard your comment on, you got to watch what this thing does. And maybe they pick up a bunch of Samsung's business in the next quarter or something.
I don't know about that.
Well, they are having real tough problems with the Samsung people turning the phones back in.
Well,
they only have about 15% of the people in the United States that have their phones are turning them back in.
Yeah,
So,
plus, in Asia in general, I'll just tell you this. I mean, you're a developer, and you'll probably find this interesting. When we have to find an Android developer over there where I'm at, they're like hanging around on trees. You know, I mean, like everybody knows how to program in Android, but an iOS guy over there commands like a triple premium. You know, I mean, because there's just
you can buy a $600 computer and become a developer for Android. You kind of have to buy about $3,000 worth of stuff from Apple to become an iOS developer.
Yeah.
And I think that really over there where every penny counts and you make $10,000 a year. Yeah. That's it's very different.
Which includes China. Hey, you want to hang out or you got to go?
I wanted to talk about one more thing in Amazon before, and then I'll go.
Perfect. Great. Thanks for hanging out. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. We've got David White on with us. What a treat. And, David, before we start talking again, I just a big update, newsflash. The CEO of Wells Fargo just said, we're sorry. I just wanted to.
I was almost going to play it. I've got the little clip from what's that gal in the 50s or in the 60s? I'm sorry.
Yeah, I know.
What's her name?
I can't remember her name, but I know what you're talking about. God, what a bunch of idiots. So we were finishing up with Apple.
Yeah. Well, Back to the whole margin thing.
Oh,
right?
here we go.
Yeah,
Oh.
there he is.
Thank you, Al.
What's her name? Not Leslie.
God, can't. It's Bonnie. No, Brenda Lee.
Brenda Lee. That's right.
I'm sorry.
Yeah, I saw that last night. Wells Fargo, the new CEO.
I was going to say Patsy Cline, Larry. That's what I thought it was. Patsy
Okay.
Cline. Okay, good.
Yeah. Anyway, the back to the whole margin story that everybody's looking at. What's your call on Amazon?
Well, it's just terrifying to try to short something like this. It has been, in my opinion. What I'm thinking is, when's the next news out on this one?
Earnings, after the bell tomorrow night?
Tomorrow night. Okay. Yeah. I mean, this thing could jerk around 30, 40 points either way. I mean, it's kind of like, I know intermediate sport right now is 827. That's really it. I mean, it's that we had a big profile appear below price action recently on the long term. I'm showing now. But again, I mean, the earnings, I think you just got to step aside on this one and just kind of wait until the fallout happens and then look for some, areas to pick battles after that. But I mean,
mine is not so much a thing of wanting to short it, but not being long, just
right.
For what I see them doing. Amazon was depressed for a long time because they kept on spending money, huge amounts of money, on expanding their warehouses and their shipping and everything else. And that's where the stock didn't go anywhere. Once they quit spending a lot of that money, the stock really took off. And my thought is they're back to spending money. They bought at least 40 planes and going to spend probably $4 to $6 billion this year on just new planes to ship their own stuff around. And I'm wondering if that doesn't go right back to the story on margins. Because
their margins are ridiculously low, aren't they?
Well, that's what I was going to say. How long does it take to get back that $6 billion that you spent for planes? And it's probably going to be $10 billion or $12 billion actually in the course of a couple of years, right? And when you're basically working on margins that the grocery stores work on, but you're supposed to be one of these high-tech companies that makes, is the same thing as having a printing press in the back of the office, right? You just turn the machine on and cash falls out the other side. But that's just the opposite of that thing. He just keeps on adding more expenses and pushing down the break-even point earlier. And I'm wondering if more than just the sales, it's going to be how much money this guy is spending and how much farther down the road that we did. Yesterday on my show, I brought up the difference between that and Alibaba, where Alibaba is basically losing or burning through $20 billion a year compared to Amazon, that up until this point where they're spending money on planes has spent since 2020 billion building out its thing.
Incredible.
So they've in 1 year did what the last 17 years were for Amazon. And you kind of go back to the idea of how much money are they actually making, what's their margin, and how long, even at Amazon's size, does it take to make 10 or $12 billion back at 6% margins, right?
I've got two questions to pose to you. What if, how much would it disturb people, talking about margins and getting back some cash, how much do you think it would disturb people if they just across the board literally raised prices 2%? You know what I mean? Like just put almost a 2% tax on top of everything. Would anybody even notice or care?
On Amazon?
Yeah, on any goods that you buy on Amazon. I know when I go there, I don't like to go there unless I absolutely have to go there because I don't know. I just feel like something's wrong there. But if they just basically said, hey, we're going to take more of a so-called tax on every product, would anybody stop ordering things from there if they just kind of bump prices up?
Yeah.
Really?
Anybody? Yeah. I mean, is there that much loyalty from Amazon? As long as the overall price is lower, if they bump up prices 2%, but you still get free shipping with Amazon Prime.
Yeah.
If it's still cheaper, yeah, they still buy, right? If it's actually more expensive with shipping than somewhere else, I don't think there's that much loyalty. I think there's a lot of, it's easy.
Yeah, that's what I'm saying. It's ease of use. Like, who would really, if it's $102 versus $100, I'd probably just hit the button because I know it's going to come to the door, and and
right,
I don't have
but
to
that's not
go to another website.
That's not where the big sales are. The big sales are people like Tom O'Brien that's outfitting 20 houses, and he bought 10 new bathtubs, at a whack. In one whack.
I already buying 10 new Porsches. Did you hear that?
Well, that's part of it, but really the why he loves Bezos loves everybody buying stuff from his thing. That's mostly about margin. Mm-hmm. He's no different than anybody else. 20% of his customers make 80% of his money, right?
Okay.
And that's a Pareto rule that's been around, the standard rule in just about everything. 20% of the most vocal people are going to be the most vocal people. 80% you'll never hear anything from.
Right.
If you're in business, that's kind of that 80-20 rule that's been around forever.
Right.
And
I got another question for you. We got to go to break in about 30 seconds, and if you can answer this one.
I'll let you go on. Go ahead.
Okay. If they decide, how close and how much rumbling would it be since the AT&T takeover has started to happen, or merge or whatever? Are the antitrust kind of clouds starting to kind of hover over this thing too?
I would say that there's a 5% chance it goes through.
Okay.
95% chance it doesn't make it.
Okay. All right. Well, listen.
Go ahead.
We're going to break. If you can hang out, that'd be great. If you can't, I understand it.
Well, time for me to finish up my newsletter. So I'll have to say, au revoir till another day.
Thanks for joining us, David.
Okay.
Okay. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just announced a special offer for subscribers to his trading service, Fibonacci 24/7. Right now, you can get a month of Larry's Fibonacci 24/7 while gaining access to his upcoming live webinar, The Pattern That H.M. Gartley Missed, taking place Wednesday, October 26th. This live workshop will be archived for subscribers if you cannot attend live. And if you order right now, we'll also send you a copy of Larry's book, A Trader's Guide to Financial Astrology. This book retails for $90, but we'll send it to you as part of this special offer that runs through the night of the workshop, Wednesday, October 26th. Sign up now and get a free copy of Larry's book, a month of his Fibonacci 24/7 trading service, and a live workshop on the pattern that H.M. Gartley missed. With a 30-day money-back guarantee, this is an offer that you can't let pass you by. Sign up today for Fibonacci 24/7 by visiting the front page of TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. It's a real treat to have David on. And a couple of things that he said really, I mean, they hit home when it comes to margins, talking about Apple and how much it really takes to kind of recoup those same numbers when your margins tighten up, and that 3% relative to 7% that he was talking about. Very, very true. And, you know, if that's a trend in force, margins getting tighter, you know, that's something to pay attention to on that stock. And technically is what I usually look at things at. But, you know, having some of those hardcore numbers like David's talking about, it's awesome. But you always got to factor in sentiment, which he alluded to, you know, with everybody kind of having it in the hopper as far as their portfolios and things like that. And, hey, Apple's Apple. So a lot of things to think about there. I'm showing the dollar on our scanner right now, and the reason I'm showing it, don't reference this a lot, but I probably should. As you can see, green, yellow peel back, and then we've got a red 240. So there's that bottom of the profile, 98.60 on the 240. So here's the chart. Here's the 240s on the dollar. Talked about, you know, short-term support, and that is why having the scanner, making your own custom portfolio, kind of having your usual suspects on the screen, as well as being able to find real-time sorts and things that are popping up dynamically is pretty important. I kind of use this, got some accounts where I can trade a lot of different instruments in different parts of the world. And this thing covers quite a bit, but here's the dollar, the way it looks kind of from a cell structure standpoint. And I show the charts a lot primarily on the show, but the scanner is kind of a way to get all this without, you know, having to surf through all the charts by just kind of looking at it in one matrix type neo view, if you will. So just wanted to point that out. There's that 98.60 rounded off right there. So again, that's the short-term support situation. Here's the bigger daily support, 98.15. So those are the big numbers to pay attention to on the dollar. We've climbed we've got above 99 yesterday, which was incredible. And Joey has been calling 98, 100, you know, that psychological area barrier, if you will, for the dollar. We've reached a little bit of that, poked into it just barely yesterday and come off. So, you know, gold has bounced a little bit based on the dollar kind of peaking. There's that 1278.50 we talked about as a top right now. We reached 1278 rounded off. So yesterday and then today we've reached 1277. So that's gold for you. That's kind of reached the top of the profile. Just wanted you guys to know that. We've talked about the S&Ps earlier. I'm just looking at the den now. Couldn't get through that 2150 area, that kind of DMZ up top, and now we're just kind of floating around in the middle of the profile down here. But the more important thing is getting below our weeklies again. 2134 rounded off. So that's the situation there. Let's take a look at some. We've got a lot of stocks we could talk about today. But one of my favorite places to eat other than Ralph's is Chipotle. And here we go. So it looks like pre-market 388. So this is a pretty serious situation here. Chipotle now, and I'm going to blow this up a little bit here. We reached the top of the profile this week. We reached the bottom of the profile last week. If you look at these profiles and you get these in the scanner, I'm going to pull this up, put on my sales hat for a second here. Let's just pull up CMG. Man, I love this thing. There's nothing like it out there. There's our numbers. There's that weekly unfair low, 392. The shorter term time frames are going to show pre-market. So these are still kind of stuck on daily and weekly outputs for those stocks, not open yet. But here's where you can get a little snapshot of what's going on pre-market here. There we are. There's Chipotle down here. And we're not disseminating prices. That's why you guys get a deal, because we're not actually we're showing price derivatives, which we're not going to completely advertise that we're getting around those exchange rules. But so 417 unfair highs on the weekly, the unfair lows 392, 393, and now we're trading 388. So pretty damning situation for Chipotle, and we could have literally stops included, the whole 9 yards. I don't see this thing bouncing. I see this thing as a weak stock in a market that's at best gone sideways lately. Market help. Apple starts getting some momentum down. I know that's not a food stock, but again, this could just have some people running for the door on Chipotle. Keep your eye on that one. Let's take a look at a place that sells bread. And you talk about margins. You know what a bushel of wheat costs. Panera. Looks like we're hitting 204 this morning. So what's happened this week? Again, we hit that to the tick down below. Weekly unfair lows 191. Now we're trading above here. So 201.32 is the big number on Panera. That might be a little chance to as a trading opportunity there, but I'm not a huge fan of buying this stock. So I think it would be somewhat wise to just wait on this one. I don't think you got to spend a lot of mental capital on that one right now. And let's take a look at, we've already had our Wells Fargo news today. So let's take a look at, what was I going to pull up here? I'm sorry. Got it on my list. 3M, sorry. Cutting guidance. And it looks like we're printing about 165 this morning. Not yet printing, but it's probably going to open around there. So 3M, I'm not so bearish on this stock at all. I'd like to see this as a buying opportunity, getting back above 166, 167. I love how this thing's pulled back off those weekly unfair highs down into this area. I don't think you need to be looking at this as a short opportunity, even if it hovers down below these weekly unfair lows. I think you've got a gift situation, finally waiting patiently until we get to support on 3M. A couple other stocks here, General Motors. I know Panera's, they make a lot of money off their catering, but still high margin business here. General Motors. So where we're at this morning, it looks like we're printing 3140. We're going to talk about GM when we get back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. General Motors, just finishing up with that. Basically stuck right in the middle there. I don't think you need to, my feelings on the market in general. And it's interesting how they jacked up all the truck prices and then discount them and play that little game right now. But went and looked at Ford trucks the other day. All right, so a couple other things before we leave today. Let's take a look at Pandora. Got clubbed pretty good here, down to 11. So, you know, you can't really foresee this happening. But again, you know, it was kind of okay to be short, not okay to be long on this one. That this is those powerful situations when you break technically on the profiles and you go back and retest them. You never knew that this was going to happen. Another leg down on this with earnings, but something was fishy there, to say the least, before that happened. Let's take a look at Under Armour. Spandex got popular again. Here we go. Looks like we're printing already about 32.65, so pretty ugly scenario here. Under Armour, and there's nothing down here. So is this on sale? I don't think so. You gotta stay away from this one right now. You're playing with fire, to say the least. Like hot volcanic lava. Let's take a look at another one that's kind of bouncing around today, Sprint. If you guys are looking for a $6 stock, we found one for you. Printing looks like about 6.5. So this is the situational Sprint. There's not a support area on this one until 597. Just keep that in mind. Crude we've talked about continuing to slump off a little bit. The big numbers on crude 46.23 and 49.5. If you're joining us late, we've talked about the dollar. We haven't hit any currencies. I just want to hit these really quick. Euros come. I got to restart that. Sorry, guys. Here we go. Euro's bouncing a little bit off these weekly unfair lows, but there's like, in my opinion, zero reasons to buy this. Just passing on any long opportunities. We've talked about reaching some targets around 109. Now you just kind of got to wait for information for the market to come to you. But the cool thing is about the euro, and the reason I'm bringing this up is trading that bounce is a low probability situation, in my opinion. You've got a daily profile that has appeared above price action, and you've come up and met it. So 109.34 stops above. I think you've got a chance to revisit 108. Was it 108.87, something down there? 108.87 as a pretty high probability trade. Profile above price action, already came up to it, and now we could revisit, which would be ultra cool on the euro. The yen, man, this is, I hate to say this, but my favorite trade. That means it's probably going to reverse. But I love how this thing's acting. I think this is a long-term move we're getting ready to experience here on the yen, so pay attention to that one. Aussie, long and strong still. And let's take a look at Joey's Yuan trade here. So, man, the show's going to be over now. Guys, stay tuned for Larry. He's next. Thanks again, David, for coming on today. Very enjoyable. Stay tuned for all the hosts on TFNN. We'll be back again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.